Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW SYS 008 traders, and our website is www.stochastic-magdi.com. For all trade, we use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW traders. Let's get started. The title of this video is how to swing trade using the Pitchfork tool like the pros. Alright, so how do we use the Pitchfork tool? It's a very simple trading tool that one can apply when one is using swing trading. Alright, I'm going to start drawing lines on my charts, okay, to illustrate, okay, the simple way one can apply the Pitchfork tool. Alright, we're gonna now bring in on now this Pitchfork tool. This is my Pitchfork tool. When we want to use the Pitchfork tool, we need 3 points. All right, 1 point, 1 pivot point, okay, and then another point here, and then the third point here. According to the market principle, ladies and gentlemen, we want to have first a bullish progression and then a profit taking, not 100% profit taking. So price start moving up from the first point that we call A, alright, and then price reaches point B, B for Bravo, and then price changes direction and went down to the point C. This is the best way to use the Pitchfork tool. 3 points. There was a bullish move, a profit taking, and then the price starts changing direction at the point C. This condition is very important. Let me say this again. Price start moving up from point A and then reaches the point B, and then price changes direction at the point B, and it's pulling back. This is a profit taking, not 100% profit taking, all right? And the price reaches the point C. As the price reaches the point C, the price now starts changing direction, okay, going up again for the second time, all right? So here we see the price start going up, all right? Then we will pull out our Pitchfork tool like this one here, all right? And then we will put, okay, the middle line to the starting point right here. The middle line of the Pitchfork tool, we put it to the starting point. The other end, we put it to this point B. And the third point, we put it here. That's how we use the Pitchfork tool. Now, as we draw our Pitchfork tool, we know that the price start going up for point C. All right. Why do we need the Pitchfork tool? Because the Pitchfork tool is giving us hidden support or resistance level. Is telling us, is also highlighting possible, okay, target price level. So price changing direction at the point C, we are watching it. As the price reaching the median line, we may decide to take some profits, okay, or secure our gain. If we are day traders, all right, and we see this kind of setup like this, all right, we will switch to a lower time frame, okay, to look for day trading opportunity as the price is approaching, okay, a possible, okay, target point. All right. Now, this is after an up move. All right. I want to show you another example. This is, in this case, we are talking about a downtrend. Price went down. Pay attention carefully. This is about swing trading. All right. But we are not forgetting day traders also. So stay with us even if you are day trader. Okay. So now the price will start moving down from A for alpha, and went down all the way to point B. All right. You will see this even on the 2 hours chart, 4 hours chart, daily chart, hourly chart. All right. If you are swing trading, you can look for this setup on a monthly chart, on a quarterly chart, on a weekly chart, and then when you see the setup, you will go to the signal time frame and then select a low risk entry point. This is about a multiple time frame trading method. You will not use okay, the setup as your signal. No. That's the old way of swing trading. I'm not saying that it's impossible to swing trade that way, but it's a bit too risky. All right. So price went down from A to B. All right, and then there is a profit taking. So the bear that was selling from A to B decided to take profit. So price started rallying up a bit, and then reaches the point C. As the price reaches the point C, the price starts changing direction again to continue the down move. All right. So as the price reaches the point C, we will draw it. We will pull out. Okay, so to speak. I'm using here TC2000, a beautiful trading software, by the way. We will pull out our Pitchfork tool. All right, and then we will do what? As I said to you before here, the middle line. We will put it at the starting point of the trend. All right, and then we will drag the second part to to the point B. All right, right here. The second part we put it here, and the third part at the point C. Now we have our Pitchfork tool in place. All right. As the price starts going down at the point C again, which will be continuation of the previous trend, provided that we receive a signal to sell here, and the price starts going down, we will use the median line of the Pitchfork tool as our target point. All right. So as the price approaching the edge of the median line, we will decide to take some profit. Okay. All right. We'll decide to take some profit. As a day trader, as the price approaching this possible reversal point, you will go to the lower time frame looking for opportunity to buy, because the price was going down and reaches a possible target zone. You will look for opportunity to buy. If you receive a signal to buy, doesn't mean that the price cannot break through it. The price can perfectly go through it. All right. So don't assume that definitely the price will definitely change direction here. Doesn't mean that. Okay. All right. You see now. So the key point I want trader to remember: we want to swing trade. We want to swing trade, without violating the market principle. Price move up from A to B and pull back not 100%. It means that the market is still bullish. The bulls are dominating the market, as long as the price is at least above the 61.8% Fibonacci retracement level of the prior trend. Okay, all right. This is, it may even go down to 78.6% or 88.6%. The key point is that there is no total retracement. All right, price did not cancel the previous trend. Now we pull out our Pitchfork tool. We draw it on our chart. This will allow us to know the possible target price. Sometimes we can go to the monthly chart or quarterly chart. We will draw the Pitchfork tool following these guidelines. Price went down, price pulled back, and we will draw the Pitchfork tool. So when we see the price at a possible target level, as a swing trader, we put the stock on our watch list. The price may change direction or may not. All we can do at this point, as the price approaching the median line, which is a possible reversal point, all right, possible reversal point, we can easily draw a warning line there. So we are watching it because we are not alone. There are other traders watching it too. So it becomes very interesting. All right. So as we draw our warning line, this is the setup. We can switch to our signal time frame and just keep our eyes on it and see which direction it's going. If it's going up, we'll receive a bullish signal. If it's going down, we'll receive a bearish signal. And then we'll go to a lower time frame to select a low risk entry point. This is valid for swing trading and also for day trading. The gorgeousness, all right, so to speak, of the Pitchfork tools, that it allows traders to avoid fighting the market. It also allows traders to buy at a best support level and also to sell at a valid resistance level where professionals are likely to enter the trade. One of the dangers of day trading or swing trading is that ordinary traders end up fighting the market or end up confronting the professional, and they get into trouble. So the best way is to trade together with the professional where they are likely to make their swing trading decision. So together, you can swing trade. All right. I hope you see something about you learn something from my drawing. All right. But the key point I want trader to remember, for the downtrend, price went down, and there was a little bit of profit taking. So we have A, B, C. We pull out our Pitchfork tool to draw it. That's it. There's nothing magic about the Pitchfork tool. All right. It's just highlighting for us hidden support and resistance level or possible target price. All right, where most professional traders are likely to enter the market. When we see the setup, we must validate the setup. So we see, for instance, a Pitchfork tool, okay, at the media line, we think that it's going to reverse. You see on a weekly chart, okay, verify the monthly chart, verify the quarterly chart to validate the setup. Now, wait for a signal, okay? If the signal failed, just know that it has failed, and then select a low risk entry point. All right, this is about swing trading. Swing trading requires more discipline. Trader will always adhere to the 5% money management rules, which means if you are, okay, you have a 1,000, okay, trading account, $1,000 trading account, you can only, okay, risk at one time 5% of that 1,000, okay, dollar. If you have 100,000, you will risk only at one time, okay, 5% of that amount, which means if you open 100 trade, the 100 trade should not exceed the 5% of your trading account, okay? This is just very simple rule. You can decide to use 3%, you can decide to use 6%, but the rule is that you don't want to expose, okay, your whole trading account, which means you have $100,000 and you open a trade that is valued at 100,000, which means if all these trade went against you, you are out and you are wiped out completely, which is not the best way, okay, forward. Also for swing trading, you want to know when, okay, it's the best time to enter the swing trade. All right, very often on Monday we see a market going ups and down, and also on Friday, this is not the best time in my view to enter a swing trade. Monday and Friday, I personally try to avoid that on Monday, on Tuesday, and Friday to avoid coming to the market. Also, traders, swing traders must pay attention to the economy news. You see a stock, you see a setup, a technical, okay, setup, okay, go to Google Finance, go to Yahoo Finance. You see what has happened this week for Cisco. Did you go to Google Finance, put in Cisco, Epic, CSCO, Charlie, Sierra, Charlie, Oscar. This week, okay, we know, you know, right? There was some warning given by Cisco. The stock gap down, okay, from $24 level round down to 21 something, $21 levels. Okay, you see how the economy news can change instantly the dynamics of the market. These are warning that no one can expect. It can happen at any time. That's why we use the money management rules and also keep our eyes wide open without closing our ears, meaning that we want to pay attention to the economy news, check Google Finance, check Yahoo Finance. Take it like, all right, a profession, okay, professional athlete training themselves, very disciplined. Do it that way. Do not push it. Go gently. All right. I'm going to show you now. Enough of my blah blah blah. All right. Hope you like it. So I'm going to remove all my drawing and we're going to look at a real chart. All right. So here we are. We are looking at a stock here. Okay. Ross Stores Incorporation. Okay. Epic Romeo Oscar Sierra Tango Rost. Epic Rost. Okay. Right here. And we are on a monthly chart. As you can see, I'm going to show you on a real chart what I've already drawn on the chart, okay, to illustrate, okay, how we can use the Pitchfork tool for swing trading. We can see that this stock, okay, went up, okay, from here all the way up here, okay, all right. And then we see what I call a profit taking because it did not come down to cancel it completely. It didn't come down to cancel it completely, all right. So this is not 100% retracement. So it's just a profit taking. Now we see the profit taking. We do not start using the Pitchfork tool. We wait for the price to start changing direction. So we see now it start changing direction here. The green candle start coming up. Okay, it start going up. At least to go above the opening price of the latest candle here. All right. All right. So it starts changing direction. So what do? I'll just highlight this point. I call it A. All right. Pay attention. Call this one B for Bravo. All right. And this one here, C for Charlie. Then I'll quickly go to my chart and pull out, okay, my Pitchfork tool, the median line. I put it to the starting point. All right. Are you with me? All right. All right. And then I'll put, okay, like this, second point, and right here. Okay. So I'm going to remove my blue lines to avoid confusion. So the price when start going out from A, went all the way to B, and then pull back to C, like I showed you already. All right. You see now, it's beautiful, isn't it? We're on a monthly chart. Okay, we can use this strategy even though for day trading, but we are talking about swing trading. You can see that as the price started changing direction here, it moment please, let me remove, okay, 1 second please traders, so you can see clearly what's happening here, so I don't, okay, so now you see now, okay, we're on a monthly chart. All right, so the price start changing direction here. Can you see in your chart? Let's zoom into it. All right, okay, now you can see that as the price start changing direction here, it was coming near the median line because that's our target. Look, as the price came very close, you see this candle here, all right, there was a bit of profit taking, yes or no? All right, it went down a little bit, okay? All right, so you receive a buy signal here like professional, and you also decide to enter the candle after the red one. All right, you change direction and then pull back nicely, and you are waiting. Clearly you receive a buy signal. You are in this swing trade monitoring, because one of the dangers that you enter a swing trade and you don't know when to come out or when the professional likely to take a little bit of profit. The Pitchfork tool will assist you to know when to start grabbing some profit before it is too late, okay? So as the price going up, you are watching it, you know your target point, or even you set the automatic profit taking, a limit order on your account, set the limit where your broker may pay you straight away when the price hit that level. So target is hit. As always, do not be too greedy. All right, you can see that it didn't touch it exactly. They took profit, and the price went down. All right, you can even swing trade it to the downside. If you don't want to, it's a bit risky. You can swing trade from the edge of the median line if you receive a sell signal, but can be risky because you have to understand that the trend is bullish. All right, it was a little bit of profit taking. All right, so it's bullish. So when we want to pull it back down, sell it. It's a bullish stock we are selling. We need to be very careful. You may decide to wait. It come back near, okay, the edge of, okay, very close, okay, or they bring it back above the median line. So if you don't want to force it somewhere here, which is a bit tricky, you may decide to wait for it to climb above, okay, right here, the median line. Because the median line was first a resistance level, you may decide to take a profit at this point. It may be a bit funny, or you are afraid, okay, you wait. All right, and then you come back above it. You say, okay, the next target is what? The top of, okay. So for this raw stock, professional, where are they watching now? Professional that are swing trading from the media line of the Pitchfork tool are watching the edge of this, okay, this Pitchfork tool. So the price may go a little bit horizontal, which means it won't go maybe directly to touch it. It may go sideways, and then boom, very close to it. So we know where they are looking, what the professional are checking right now, okay? So as a swing trader, you want to know what the professional are doing and what they are likely to do, all right? So as the price reach the median line, you say to me, Joy, how do we handle that? Okay, I'm going to go now to the 2-hour chart, okay, and looking for the median line, okay? I hope I can see on my line. You see on my line here, you see my Pitchfork tool. So you can see that the price on the 2-hour chart slowly but gradually came here and then it went above it, okay? As it went above it, you can just simple draw trend line on your 2-hour chart. You can use hourly chart, you can use 3-hour chart, it's up to you. You can use 30 minutes, it's up to you, okay? Which time frame you are using for your signal time frame, it's up to you. So you can draw, okay, a trend line, which can help you also. So I can draw a trend line like this, just drawing this point and this point here. I can draw another trend line, okay. Like this. It's too messy now. I'll remove the second one. Okay, I'll leave it like that. I can draw also a common sense trend line like this along my price, you see. Yeah, when it was going up like this, okay, I can do all this. All right, now you can see that what the price did here. All right, the price went above, okay, my okay, the media line of the trend, the Pitchfork tool. All right, and then pull back a little bit, okay, to display a higher low. We are looking for a higher low above, okay, the media line of the Pitchfork tool. All right, okay. You see here? So this will be on the 2-hour chart, okay? You see here? It pulled back a little bit, okay, and then start changing direction, okay. All right, you will use the multiple time frame trading method, okay, to enter the trade. Aggressive trader will quickly buy. Right here, you can see that you went above it here, but quickly pull back again. All right, you see here, it went above it, you come to the edge. Traders sold it. These are day traders looking for opportunity to sell. They sell it on the edge, probably roll it down quickly to recover. All right, so you may decide sometime on the lower time frame, probably went above it for the first time, it pulled back. You know that these are sellers. If it goes back for the second time, you may decide to buy it aggressively, okay. But you may be patient also and just wait for, okay, the first higher low above, okay, the median line, and then you go to another time frame to enter the trade, okay, at a low risk entry point, okay. So you see now, from the 2-hour chart, we can see the median line. As the price goes above the median line, we can use the TSTW34 for day trading purposes above, okay, the median line, okay. Also, when the price was coming near the median line of the edge of the median line here, swing traders will decide to take a profit. Let's go back again to the, okay, monthly chart and looking at this Ross stock. As I've drawn my chart, 3 point I need to draw my Pitchfork tool. The starting point of the trend of a new trend, okay. The trend has ended here, and then there was a little bit of profit taking, not 100% profit taking. We draw our Pitchfork tool and have to highlight, okay, possible, okay, resistance and support level. Now, when a price goes above a resistance level and validate that resistance and find a support, that resistance level become a support level. Let me say this again. When a price goes above a resistance level and find a support above the resistance level, that resistance level become a support level. On the other hand, when a price dip below, okay, a support level and find a resistance below that support level become a resistance level. All right. So it's very simple, but it all require more discipline, okay, if you are using the, okay, Pitchfork tool for swing trading. First, the Pitchfork tool can allow us to manage our swing trading by knowing the possible target price and also to go into the mind of other traders. Try hit a possible target level, either the median line or the upper median line. As you can see now, okay, the price is heading to the upper side of the Pitchfork tool. So what we will say to traders that understand a bit of French, rendezvous on the edge, okay, meeting point on the edge of the upper bounded body of the Pitchfork tool. All right. So as we are swing trading from the median line, we are watching the upper end of the Pitchfork tool. There is another way that we can use the Pitchfork tool. This is to combine the Pitchfork tool with convergence signal. All right. Let me explain myself to you. I'm going to use now in this video. All right. I will use, okay. I will use a Fibonacci retracement level, but I will not. Okay, first let's do it. Okay, I'll draw it from the beginning to the end. Okay, so we want to see how much profit. So I draw my Fibonacci retracement tool from the starting point to the end of the trend to measure how much profit these people has taken here. We can see that the price pulled back to the 38.2% Fibonacci retracement level. All right. Talking about combining the Pitchfork tool with convergence signal. All right. Now we know that they have taken 38.2% profit. The next step is to use my Fibonacci retracement. Now I'm using the TC2000 to have the Fibonacci retracement. I have to start from the end of the trend, all right, to the beginning of the trend. For the retracement, we start from the beginning of the trend to the end of the trend. For the Fibonacci extension, using TC2000, we start from the end of the trend to the beginning of the trend. Now I have on my chart my Fibonacci retracement level. So price pull back to 38.2% Fibonacci retracement level. Professional Fibonacci professional traders will be watching which level? The first level that they are watching is this level here at 161% Fibonacci retracement level. What I said to traders, do not ignore any of them. Pay attention to all of them. So as the price approaching the edge of, okay, you see here, the edge of the upper end of my Pitchfork tool, there is another Fibonacci retracement level which is at 138% level. There is a high chance that this stock, the professional may say, well, Okay, let's bring it instead, okay, to the 138% level. Now, if that's happened, all right, provided that the fundamental are sound, we are talking about combining the technical and the fundamental. Also combining the Fibonacci retracement, Fibonacci extension with the Pitchfork tool. What we are trying to do is to locate a convergent point and align it together with the Pitchfork tool. All right, though there's a resistance here, a possible, okay, reversal point, which is the upper end of the Pitchfork tool. We shouldn't forget that there are other traders that will set their target at 138%, 150% Fibonacci extension level, or 161% Fibonacci retracement level. So the cautious way to handle this swing trading will be myself, if the price reaches the upper end of the Pitchfork tool, to take a profit, and then again go to the lower time frame and monitor what is taking place. And when we see a higher low above, okay, the upper end of the Pitchfork tool, will meaning that the price goes above and pull back a little bit, and they find a support or display a first higher low above the upper end, then game on. All right, we will take it again and we will monitor each Fibonacci extension level. Do not ignore the 138% level, or the 150% level, or the 161.8% Fibonacci extension level. All right, provided that the fundamentals are sound. If the fundamentals are weak, or if this company come out with another warning, as Cisco did this week, they probably gap down. All right, this is what we are talking about: the technical and the fundamental together. Okay, all right. Always, that's the best way forward. If anyone is saying to you technical alone, smile, but do not follow the advice. Okay, smile, but do not follow the advice. Okay, very, very important. All right. Same thing you are training for, right? Pay attention to the economy news. Always know what is happening. All right, this is crucial. All right, it's being more disciplined. All right, instead of throwing money at it anyhow. You can do it. All right, you can do it. All right, you see now. Okay, so to align the Pitchfork tool with a convergent point, that will be a better. There's another way. How can we do this? Okay, you see that the price here, I don't want to confuse trader with too many tips. You can see that the price went down from here to here. Now the price went up again to the starting point. Okay, I don't want to remove my line. Pay attention carefully to what I'm saying now, because it's a cycle point here. So you see the price went down from here all the way here, and then went back to the starting point. Okay, the starting point is very important for us, which is also a convergent point. So as the price approaching the edge of the media line, day traders, swing traders will manage their trade. Day trader will look for opportunity to trade, to day trade. Swing trader will look for opportunity to take profit or secure their gain. All right, price goes above the cycle point, game on. We can also use another target point, which means from the bottom of the move, you see, it went down from here to here, and then went back to the starting point. It's like a cap. All right. Now we measure the depth of the cap. All right. Are you with me, or am I drawing too much line? If you don't understand, okay, replay the video. All right. Google allow you. YouTube will allow you to replay the video. Okay. If you don't understand. All right. So you see here, it went down like this, and then went back again to the starting point. We'll measure the depth of this this price move, and then as it come out, we can project it here. You can see that my projection in this case went above, again, the upper end of my Pitchfork tool, which is coming near the 138% Fibonacci retracement level. Sometime the best signal or the best setup with the Pitchfork tool for swing trading will be like this. You may see the upper end at the key Fibonacci retracement level, or at the price target point as I do the projection here. All right. Suppose we have the upper end of the Pitchfork tool at 161.8%. That's a conversion point, because the Fibonacci traders will be willing to take some profits, all right, because they know that the price has pulled back 38.2%, and now it's at 161% Fibonacci extension level. They will be willing to take profit. If at that point in time we draw a pitchfork tool, and the upper end of the pitchfork tool is also at 161.8% Fibonacci extension level. That represents a conversion point. All right. So the price at a conversion point, and the pitchfork tool also the price also on the edge of the pitchfork tool, that will provide a better setup for us. All right. So do not use the pitchfork tool on its own alone. When you are using the pitchfork tool, do not ignore what I call the convergence signal. If you want to know more about convergence signal, go to www.stochasticmarket.com. For pitchfork tool trading, go to www.dayprotraders.com. At the end of the day, as a swing trader, the definition of a swing trading is to enter a trade from the point A and to come out at a point B. So you swing the price, okay? You are swinging the price from A to B, okay? All right? You can swing up, you can swing down from A to B. So always when you are entering a swing trade, where are you entering the trade is very important. And you must also know where your swing will end. All right, but a lot of traders get into trouble. They enter the swing trade, but they don't know where they're going to come out of the swing trade. All right, you enter at A, you must know straight away at the point B where you're going to come out. That's why a lot of swing traders will use the stochastic overbought. They will look for opportunity to sell and swing until the stochastic is oversold. As the stochastic is oversold, they can swing again from oversold to the up when it's to the point where the stochastic is overbought. But it's a crazy way to use the stochastic. That method of using the stochastic is only valid when we have what we call a balanced market or horizontal or a consolidation market. But when the price is trending, that method of using the stochastic is null and void, and in fact disgraceful, as some traders are forcing the stochastic on the market. All right, okay. So to swing trade, so the pitchfork tool will allow us to know the point A and the point B. So when we enter the trade at the point C and we are swinging it, all right, price approaching the median line of the pitchfork tool, all right, okay, it's like the amber light or the orange light, okay. Hold on a second. Elderly is crossing the road, a child is on the road, or a train, we are at a level crossing, a train is about to pass. Slow down, okay? Slow down. Secure your game or take profit. Take profit. If you know how to trade properly, you can re-enter the trade. Sometimes they may not allow you, the price may go fast or gap up. Okay, it's happened. But sometimes you may have to go to another time frame again and re-enter the trade after the price crosses above, okay, the median line. Price going up again, you watch the upper end. It doesn't mean that the price will definitely reach the upper end. Can change direction at any time. If a conversion point happen to be inside, okay, the pitchfork tool somewhere here, traders who are waiting for the price to reach that target level will take profit. All right. So we want to know where a group of traders are likely to take profit. That's why we are using the projection, the price projection, the channel projection, all right, the Fibonacci extension, okay. We also use, the Elliott wave patterns, all right, very important. We use also the Fibonacci pattern, the crab pattern, the butterfly pattern, the Gartley pattern, all right. All these things will allow us to know the target level where professionals are likely to make decisions. One can use the pitchfork tool with the butterfly pattern, the crab pattern, the Gartley pattern, okay, to make excellent swing trading decisions. One can also use the pitchfork tool with the Elliott wave pattern, the zigzag pattern, together with the pitchfork tool, all right, or the Elliott wave corrective wave pattern, together with the pitchfork tool. One can use a normal chart pattern projection like a round bottom, okay, price target, okay, an inverted head and shoulder price target, the head and shoulder price target, okay, target level, together with the pitchfork tool. As always, this is very important before I close this video, that traders understand this. Whenever you are trading, all right, we do not want to violate, okay, the multiple time frame trading method. Always, it starts from a setup. So, whenever you find yourself entering a trade, a swing trade or a day trade, all right, or invest, ask yourself, what's the reason why I'm buying or I'm selling? Ask yourself why. So for fundamental trader, it means that he or she has checked, okay, Google Finance, Yahoo Finance, compare, okay, the short-term debt to the, okay, current liability, check the management, check the competition, okay, do his or her own due diligence, is satisfied with, okay, the findings and decided to buy. This is a setup. Now, for a fundamental trader, it's also important to know the best time to come into the market. As we have seen in 2007, 2008, there were a lot of market participants that were buying. Yes, the market was bullish, but the market has reached, okay, what we call a convergence point, a change in direction in 2008. Again, as a technical trader, very important, you see a setup, okay, so you see, for instance, all right, you go to, okay, the monthly chart or whatever, you see, or the weekly chart, you see the peak for the price, okay, at crosses above, okay, the media line of the Pitchfork tool, as it did here. You see this is a setup. This is a bullish setup because the price break above a resistance level and then find a support. Well, do not enter the trade on a weekly chart, okay? Now, CSCWSY is your A trader. We go to the signal time frame, all right? Receive a signal, be disciplined, be calm, okay? Wait like a hunter, gently, okay? And then wait for signal and then go to the low risk entry point and take it, all right? As you are in a trade, you must manage the trade. This is important, all right? So, know which news are coming out, all right, relating to the stock or the financial instrument that you are trading, all right? How much risk are you willing to take? How much risk are you willing to take? Know the risk-reward ratio. So, how much are you risking? How much, okay, will you get out of that trade? So don't risk too much if you're going to gain less out of the trade. So at this point in time, we say, okay, possible target, the upper end. Okay, I want to risk 100 pips. Okay, how much pips from here, from the media line to this point? If it's less, I may decide to say, okay, how do we handle that? Okay, or I may decide to day trade instead. If the risk reward ratio is not suitable for me, I may decide to day trade instead. Okay, but if I look at the market environment, the S&P 500, talking about the trading triangle, and I'm happy about what I'm like to do, okay, I may decide to enter it, risking 100 pip for 200 pip. That's not too bad, all right? As the price going up, all right, and you may move your stop loss to break even. So to avoid the gap down that we have seen for the Cisco recently. So if you are nicely in profit, big profit, all right, and you are itching to take your profit, but you want to remain in the trade, you can move your stop loss to break even in case the gap down, you are out without any loss, but also without any gains. All right? I hope you have learned something from this video also about how to swing trade using the Pitchfork tool like the Pro. Until the next time, enjoy yourself and be very happy. We are the GSTW SYS 008 traders. Speak to you soon.